Inflation rates and gas prices at record highs. It comes as no surprise that buying a home, that's getting pricier as well. According to home loan company Freddie Mac, mortgage rates are up by more than 0.5 percentage point. This brings the average rate of a 30-year fixed mortgage to 6.28%. And for some perspective, the average was at 3.25% in January. Joining us to discuss how it's impacting San Diego buyers is Trent Cady with Mike Cady Realty Group. Trent, thanks for being with us tonight.
Yeah, thank you for having me. Pleasure to be here. And I know it's for the first time in a long time, I feel like we finally have some new news in the real estate market, whether it just be, rising rates, tons of offers, and home selling 20 to 30% over ask.
Wow. Okay, so talk about what the rising rates then mean for the average buyer. So somebody like me, the average buyer that definitely maybe doesn't have a luxury home that I'm looking for.
Yeah, it's definitely challenging, and a lot of people are getting priced down and out of the market right now. What I'd really recommend to buyers right now is to get educated on different loan products like adjustable rate mortgages. You're still really able to get a 7 or a 10-1 ARM, which are really safe products if you're educated on them properly in the low 4s. So just getting educated on the market and different ways to get involved in the market is the best way right now.
Okay, so when it comes to equity, what's your advice then to people who have equity?
Yeah, definitely. So sellers, of course, are in kind of a gridlock right now. They have low property taxes. They're locked in on probably a super low interest rate and tons of equity. Something that we've been recommending to all of our clients is to take out a home equity line of credit for, just that safety net. As times change here, you're going to come across some good opportunities. You never know when you're going to need that cash. And it's a way to tap into your, equity that you have currently.
Okay, so you talked about these new changes. What sticks out to you right now about how different the market is, maybe compared to last month or even the month before?
Yeah. It's absolutely changed 180. Even a month and a half ago, we were seeing 13, 15 plus offers on properties. And now it's no longer crazy to write an offer at ask or just below ask. You're seeing maybe 2, 3 offers, so a lot less competitive, but there still is a huge lack of supply out there. From this time last year, new listings are down 18.4%, pending homes are down 18.8%, and there's just that lack of supply, and there still are buyers out there, but you're just not seeing that same competition level.
So when do you think maybe that competition could pick back up? Is it going to happen in the foreseeable future, or do you think we've got to get through maybe this most recent recession panic fear after the Fed rose interest rates?
Yeah, it's a great question. I personally don't see a huge, influx of supply coming because, in San Diego, there's not tons of new construction. As I mentioned earlier, sellers are kind of in that gridlock space. They want to take advantage of their equity, but they can't afford to go west. Most people are downsizing and wanting to get to new places, but they just don't want to go to battle and sell their house and then have to pay top dollar, high property taxes, and get a new rate at 6.2+%.
All right. Anything that buyers should need to know that maybe you haven't gotten a chance to mention, but you want to make sure they hear as we see what you said is a very volatile time, a lot of changes happening right now?
No, I think it's definitely a crazy time in the market and the world right now. My advice would just be keep your head down, work hard, save as much money as you can and get educated so that you really know when the right property comes along, you're able to jump on it. You can go get pre-approved, for free. It doesn't cost you anything. It doesn't commit you to anything. And it really gets you educated on the process and what it takes for you personally to get there.
All right, Trent Cady, we appreciate you taking the time tonight. Of course, we know this is going to be something that changes from day to day, but we appreciate you giving us today's update. Thanks so much.
Yeah, I appreciate it. Thank you.
The Dow Jones Industrial Average closing down more than 700 points today, falling below the 30,000 benchmark for the first time since January 2021. The Nasdaq also down more than 400 points. Economists say that today's plunge comes as investors are digesting that recent interest rate hike by the Fed with fears it could lead to a recession. Some are saying we're probably already in one. Other economic data also released today could also be contributing to the dip. Housing starts falling 14% in May, and the Philadelphia Fed Business Index, which measures the national business growth, contracted in June for the first time in 2 years. This is in stark contrast to President Biden's comments earlier this month when he said Americans feel financially comfortable.